Just change back to my side. I've actually gone back to question which when you check when you check the news, what site do you go to? It depends if you want free or paid. The good ones, there's several of them around. I mean, there's Forex Live is not too bad. There's is it Forex Flow? That's really just Forex. You've got investing.com, which is pretty good. If you want to pay for subscribed services, then you're into Reuters or Bloomberg, which can be quite pricey. Or Metastock. There's a good news feed for live data. There are quite a few around. Anna's just checking some out actually at the moment, so we'll keep you posted on that. There's one or two that you do get with brokerage accounts. So if you're on MT4, MT5, for example, there are some news services that run free through the broker. And the same is also true. I know for a fact, obviously, on things like interactive brokers, I get a live feed through there. It just depends which platform you're on and how much data you really want to have at your fingertips. Just move that to one side. There we go. I've just gone back into Forex because just to make the point that this is the Aussie yen, and it's it's doing what it's supposed to do. Just pop that up full size. This doesn't look terribly dramatic, this volume, purely because it is distorted by this huge amount of activity that we had over here with the plunge. We had a ton of volume coming in literally across the yen complex. It was just flooding in all over the shop. We had this bit of weakness yesterday, so we had the indecision, then we've got it reversing, then we had further weakness. Now we're starting to see this move lower. And obviously what we're also seeing in terms of the daily chart for this particular pair, and be reflected across the others as well, is we're now moving down into this low volume region on the volume point of control. And that is so important because it just gives you a heads up, firstly, to what to expect next and the ease with which the price action is likely to move through this region. You can see here we've got very little in terms of price-based support. It's already been taken out anyway. It was one here. This was relatively minor on the accumulation and distribution indicator, which if you don't have it, it presents the levels according to their strength by the thickness that it prints on the chart. So the thicker the line, then the greater is that area of potential support or resistance. So these levels down here will be very minor, whereas this is much stronger. So we've already breached that. So that's from a price-based perspective. But what we're actually looking for is volume from the same perspective. In other words, from a support and resistance perspective. So what we're seeing right now here is the price action has moved into this very low region of volume. In other words, there's very little in the way from a volume perspective to cause the market to pause, certainly down to, so where are we expecting this market to move to? Well, the first point we think would probably be around 72. Why? Because that is where volume starts to build again. We're starting to see this rise in volume right the way down to the volume point of control at 65.5. It's not going to go that far. But as the market gets, it'll move easily through this region. So in other words, the amount of volume required to drive it from 73 down to 72 doesn't have to be extreme. It just has to be, above average and in line with the price action. And from a trading perspective, that is what you're looking for. You're looking for the answer to the perennial question, what is likely to happen next? And from this perspective, from a purely technical chart perspective, there is very little volume here to cause this market to pause. So by all things being equal, we will expect this to move through here fairly rapidly. And then as we start to run into this higher volume, this is where you're going to run into a congestion phase, and the market is likely to find it more difficult to get through there. And certainly if it's not associated with high volume selling, then even more so. So we're going to move into congestion, and then what you're looking for is obviously potential for reversal, potential for reversal back higher, continuation of trend lower, etc., etc. And once the market pauses in the congestion phase, you've got to remember this volume point of control. This is not a static thing. If you're looking at this on a 1 minute chart or a 5 minute chart, it will move to the next logical level where volume is building and is greater than a previous level. And obviously on a daily, that doesn't happen all the time. It takes a while for those areas to build and rebuild. But ultimately, that's what happens as a market congests for a long period. That's when the volume point of control will move, and then you get the volume building, and then you get the low volume and high volume nodes accordingly. So that's what we're seeing right now in terms of the Aussie yen. Now, if you're down on a 15-minute time frame, a 15-second time frame, you know, can you trade this to the upside? Of course, there's always opportunities to trade to the upside. You've got big 2-bar reversal here. You know, it's horses for courses. It's what you're comfortable with. This volume point of control will obviously move around fairly rapidly. You know, certainly within minutes, as this volume builds and rebuilds the whole time, it will move. We're pushing up. We've got you know, volume building in this region. If we want to see what's going on, you know, above this level it's trading now, then we move up to a slower time frame. Probably best to have this on maybe a minute, let's say. Let's tick that down to a minute, pop that up full size. You know, we're looking at this now, same perspective. We've got a little low volume node here, so we'd expect that to push through there fairly easily. But as we come up into this region here, the market's going to struggle because we've got a ton of volume here. We've got almost as much as the volume point of control. So from a scalping perspective, it's pretty limited. You know, you're only talking about a couple of pips here before we get up into this dense stuff up here. So, you know, are we happy to take 4, 5, 6 pips in a market we know is bearish at the moment? Answer, probably not, for lots and lots of different reasons. In addition to that, we've got price-based resistance here on the blue level. We've got it on the red level. You know, there's lots of reasons here. Now we're seeing decent volume driven in here. We had a doji, then we had decent volume under this one, but it hasn't really gone very far. I'll click the volume on again just to bring it up in real time. Let's click that over there. Let's put it on tick. There we go. There we go. Now we're seeing the volume come in. Good volume under this candle, but you know, it looks high. You've got, and this goes back to the whole business of volume price analysis and comparing price action and volume to arrive at some benchmark decisions. And if you took this candle as your benchmark, not unreasonable to do so, and the volume associated with it, that's fine. Then we look at this one, we look back at that one, volume slightly higher, but the spread's actually much less. Not a great deal less, but certainly, you know, it's a third less. And all things being equal, you would expect it to be the same as this one if this is your benchmark, and it isn't. So you've got some weakness there. And that's what you're doing the whole time. You are comparing, contrasting, candles, bars the whole time. You're looking at whether it's buying or selling, whether it's weakness, you know, is it an anomaly? Is price action generally in agreement? And the other aspect to volume price analysis, of course, is very much support and resistance, which you can see literally coming into play as I'm speaking. This level here, you may not be able to see it, it's got a little number 5 here. And what that means is that level has been tested 5 times so far and held firm. So each time that happens, it's like Popeye and the spinach. The more spinach he eats, you know, the bigger muscles he gets. Well, it's the same principle here. The more times a level is tested, the thicker that level becomes and the more significant it becomes. Obviously, the VPOC is very significant in terms of the volume, but these are price-based levels, so they become significant once they're hit, and so they build ever stronger. And if you get a cluster of them together, we've got a bit of a cluster here, we've got a 3, a 5, and a 2 sitting around this region, but it's also sitting around the volume point of control. So there's 26 reasons as to why we expect congestion for the market once it's trading around 32, 34. So it's another, you know, it's pulling all this stuff together and looking at the price action, using the indicators, understanding the volume price analysis methodology, and perhaps overlaying all that are the broad fundamental principles, not just of fundamental data, but overlaying it is the risk element, the relational analysis element, the relational market aspect. Because if you know where to look, if you understand bonds and you understand bond yields, if you understand currencies and risk currencies, if you understand what the equity markets are doing, if you understand gold and commodities, whether they're risk commodities or not, if you understand all these relationships, and more importantly, understand that at times these relationships break down, but they often break down for a reason, as we've highlighted at the start this afternoon with Anna. You know, this becomes the process of trading becomes a lot clearer, it becomes more straightforward, and it becomes enjoyable. Perhaps if you're struggling, you know, you find it stressful, you don't really enjoy it because you don't really understand all these various principles, and really that's what it comes down to. And I go back to what I said before, even if you're not a Forex trader, if you join the Forex trading program, you will gain 80 or 90% of what you need to know specific to any market you care to trade, because it covers VPA in detail, it covers fundamentals in detail, it covers relational in detail, it covers all aspects of trading, the mechanics of trading, understanding how to trade, how to decide or define yourself, the psychology of trading. You know, what am I? Where are my strengths? What are my weaknesses? It's all there. The Forex element, ironically, is, I would say, it's certainly a big part of it, but the overlying principles around that are universal. Just want to make sure I haven't got any more questions. I think we're all done there. That's great. Okay, let's just pop that out the way. Pop it down. Just to wrap up, let's just pop this up. If you're not familiar with Anna and her site, you can find all the details over here, all the blog posts we put up. You can find all her books, which are either on, all are on Amazon. They're either in Kindle version or they're in paperback, and you can find them. Unless you speak Japanese or Chinese, in which case they have been published there. We are speaking to a Vietnamese publisher right now. And some of these books have been going 6 or 7 years. They're actually going into second contract and reprints. They are that successful in those countries. They're in Taiwan, they're in mainland China, and particularly in Japan as well. And as I say, we're looking possibly to strike a deal with a publisher in Vietnam. So they've just been accepted. The methodology is just wherever it goes, and you can read the 600 plus comments on reviews on Amazon. It just transforms traders' lives, and we are just very humbled by the success that it has brought many traders in many different fields of trading and in different applications of the methodology as well. You can find all the indicators here. MT45, it's the same license, so you can use it on both platforms. Same with NinjaTrader 7A, it's the same license, so you can use it on either, whichever you prefer. TradingView, we're going to drop onto TradingView pretty quickly as soon as we finished on TradeStation, because the Pine script there has been upgraded. It's great. It means we can draw lines and objects now, and we can port all the other indicators over, we think. So we'll have a full suite of indicators up and running for TradingView. As soon as we finish TradeStation, we're working on TradeStation Global, which is 9.5. That's between TradeStation, this relationship between TradeStation and Interactive. So if you have an Interactive Brokers account, you can trade through TradeStation. It's a fantastic relationship. The other platform we're working on is version 10 and above, which is TradeStation Securities, which has the massively awesome radar screen. And we've managed to get all the indicators working in radar screen. So it's just a great platform. And it's taken us a long time, to be quite honest, but we are hoping to roll that out in the next few weeks. So keep an eye on that. We'll put some more details up on Labs for that one. And then finally, over onto the education program. This is where you'll find it, all the details. The core modules are there: psychology, fundamental, relational, technical, and mechanics of trading. You've got a whole raft of videos under here. It's about 200 hours of video. There's 13 PDF downloads, and you also get invited to the VPA chat room, which Anna and I host. There's a lot of traders there, and they're doing really well. We've got a real mixture of novice traders, more experienced traders. The more experienced traders give freely of their time. And it's just a very friendly and supportive place to be. That's it, we're done. Really appreciate you coming along today. Hope you've enjoyed it. We love running these sessions, so I hope that comes across. And the audio held up, for which we're eternally grateful. And our 900 download is working beautifully. We have fiber straight into the home here, so that's how we're doing it. It's just so wonderful. Hope you've enjoyed today. Enjoy the rest of the trading session today and tomorrow. Have a great weekend, and we will see you back here at the same time next week. And we are back on Tuesday morning, London Forex sessions, 7:45 UK time. So we will see you there. So thanks very much for coming along today. Hope you've enjoyed it, and bye for now.